Hey, 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 hey. Okej? Jeden, jeden jest. Działa?
We should start in about 10 minutes because the delay of the Deputy Prime Minister due to some delayed meetings caused a cutting down of the press conference, but we have to allow the journalists to talk to her for about 10 minutes. So probably at 4 or 5 we will start. It will not delay anything else because the Prime Minister is never late, so we will probably finish at 6:45 to have him on time and then the networking. So I'll try to do the update of the agenda when we start the meeting. But sorry for the delay, it should be here soon. Ladies and gentlemen, we have the signal that the press conference is over, so the Deputy Prime Minister will be with us in a couple of minutes. If you could take your seats, we will start as quickly as possible. If you allow me just to provide one technical information, all the speakers and panelists will be speaking without the masks. Otherwise, we would like to ask you to wear the masks while at the conference. It's of course up to you, but we as the organizers are obliged to provide the safety measures. So the speakers and panelists will be speaking freely without covering their faces, but the participants, please apply the safety regulations as often as possible. Good afternoon, ladies and gentlemen. Let me welcome you to the ABSL FDI Forum. My name is Paweł Pantry, and I'm the board member of ABSL, and I will be the host of today's conference. We are meeting today at the Warsaw Marriott Hotel to discuss the current conditions of the Polish economy and to see if and how foreign direct investment can support the Polish government in its plans to strengthen Polish economy after the blow of crisis of COVID-19. The event is also available to watch at the ABSL website at www.absl.pl. The agenda of today's forum is composed of two parts. The first should provide the general information on the global economy. The second part will provide a platform to discuss what plans the government has to revive the economy and to allow us to understand how business can help and how we can work together to make the recovery faster and even more efficient. We have gathered a group of investors and experts that have enormous experience in building projects in Poland in the last 2 decades. You can see all the global brands. On the other hand, we have the two most influential Polish politicians, Prime Minister Mateusz Morawiecki and Deputy Prime Minister and Minister of Economy Jadwiga Emilewicz. We hope that this combination, together with goodwill to listen and understand the arguments of each other, will result in close cooperation. Because it is this cooperation that is important for both sides of this table, because we want to create the set of regulations supporting investors already present in Poland, but also we want to open the borders to the projects and investors that may bring new projects. So to initiate the ABSL FDI Forum, I would like to ask Jacek Lewerness, the founder and honorary president of ABSL, to start it officially. Jacek.
Thank you, Paweł. Ladies and gentlemen, welcome to our ABSL FDI Forum. Dear Deputy Prime Minister, CEOs, members of ABSL, and all the key people that are here today. Actually, I'm really happy to see you, because I haven't been to any conference for the last 5-6 months. I hope that this will not be the last one, obviously, but we're very pleased to host you here today. And we're very, actually, we would like to thank you for joining us for this event. I have one letter for you today. That's the letter R. R with 3 words. First, resilience. We will talk today about why, especially in, of course, the business service sector, resilience is so key. That means why infrastructure and safety has played a key role already in why Poland is seemingly doing relatively well when we look at the global competitive landscape in business services. That's the first R. Second R, results. There's two things that come to mind when we talk about results, especially in our industry. It's talent, so having access already to the great talent we have. But two, and we will talk about that today, how can we make sure that we can get more talent into Poland, as there's still a deficit, also from other countries. And that's very important. And two, the environment, regulatory environment, when it comes to law, regulations, and taxes. How can we make sure that we go in the right direction so that we can encourage reinvestments and investments in the next years to come? And the third R is, what do you think it is? It is actually recession. It may sound very bad, but actually in our industry, especially when it comes to here in Poland, recession, a global recession, has actually positive connotations. Because at the last recession, this is what keeps, at least in my mind, in 2008, 2009, after a brief while of a stop in actually activities, our industry doubled in between 2009 and 2013 in size. So we will talk today how potentially this global recession that we're feeling and probably will feel for some time actually can help potentially fuel investments and reinvestments in Poland, especially again in the business service sectors. So remember, those three R's, resilience, results, and recession, all positive. Thank you again for coming.
Jacek, thank you very much for bringing the three R's. We will concentrate on these aspects during the whole meeting today. But now I would like to ask one of the key people that will help us not to understand only the situation where we are, but also will enable us to push together with the government the decisions that may enliven Polish economy. Deputy Prime Minister and Minister of Development, Mrs. Jadwiga Emilewicz. The titles change so much and so often, but we do count on your support, as we were able to count on your support in the past months. Ladies and gentlemen, Mrs. Jadwiga Emilewicz, Deputy Prime Minister and Minister of Development.
Thank you very much. This is obvious that the men were the organizers of this meeting. Otherwise, the steps would be there, taking into account the high heels. First of all, thank you very much for being here. This is, I would say, maybe the second meeting which I'm having since the beginning of the national quarantine, making not on the table in my desk, in my office, but in a real place. So I do really appreciate that. And of course, thank you very much for the topic and for the gathering, the people which are here today. As you mentioned, both Jacek and Paweł, I can call you like this after the long 5 years of collaboration. And this is, I many times quoted the businesses that you are representing here, and you are trying to manage a bit as one of the most valuables in Poland. And it appeared, what I told just a few minutes ago in the press conference, that it was the end of June when Jacek called me and sent me a message that it is the first month after 1990 when the first value in Polish export was services, not automotive sector, not the production, but the services. So we do really appreciate your presence in Poland, your activity here, and I do really believe that you feel really very safe and looking for in the future with the promise and with the hope, as I'm doing in my office every day. Where are we? Jacek has mentioned 3R. I would transfer it into 1O, rather. I'm looking in the future as the field of opportunities for Poland. I told that at the very beginning of the crisis, and I was quoted often in many journals and TVs, as something that is not going to happen anymore for Poland, but I still believe that it might happen, and that might be our common story in a close future. Why is so? Because it has happened in a history so many times that, of course, that recession, depression, crises, some countries and some societies left behind, but there are a lot of them which use the crisis as the opportunity, and I do believe that this is the Polish, that it is going to be the Polish case. And where are we today? So the first of all, the pandemic affect everyone. So this crisis, as I always say, we are always well prepared to the crisis that has happened before, and we are fully ready and prepared to this kind of crises. That time, of course, this one is unprecedented. We are trying to compare it to the 1929 crisis, so the Dark October, that momentum, which caused, it was one of the sources of the second outbreak of the Second World War, and it is worth to remember. But I would say that this one is even deeper than that one from the late 20s. Anyway, unprecedented crisis and unprecedented changes that it caused. What has happened in those months, it is also very, very meaningful. I remember my first meetings with the representatives of the business, different branches, furniture producers, restoration, horeca, services, hotels, every single branch represented on the Polish market. And what has been told, and it was people who told me last 4 years, and we do really understand what the liberal free market economy is. And what they told me at the very, very first moment of the crisis, where is the help and the support of the state? And I think that this is the momentum when we rediscover the state and the role of the state that should play in so many levels in that time as we are now having. So first of all, and first where we are today, so we see that the Polish state, I'm very careful in mentioning that because I'm not saying about the crisis with the past tense. Of course, we are still in a very unsafe conditions, but after the 2 quarters of this year, we must say that what has happened. It is the first 2 quarters after 1990 with the technical recession in Poland. We were growing faster or a bit slower, but year by year we were growing since 1990. This is the first year of recession. But still, if we compare ourselves with other member state countries, we see that we are coping quite well with this crisis. We are the less affected country among big countries in Europe, and the third one in a whole after Lithuania and Finland with the GDP drop. So what we expect even for the end of the year, we are making the amendments to our predictions, and they are even more optimistic than we were in April, but even if when we were in June or July. So the old data are not so bad. Even unemployment rate is not that bad as we predict in April. So we are really believing that the next year is going to be much more optimistic. We would like to have a plus in GDP growth. We estimate that it might be even 4% in next year. What I'm fully sure that it wouldn't be true if the activity of the institutions were not so rapid and definitely not dogmatic. So we used all tools that we have, that momentum, to send, to spread, and to be as efficient as it is only possible to deliver the liquidity to the market and to the companies. And that is why I think the numbers and the rates and the statistic is so well for Poland right now. This is the lesson learned, I think, after those very difficult times, that definitely the state, which is close to the market, which is strong, is necessary even in the free market economy. What is really important for us for the next coming months and next coming years? Of course, the investments. So the investment rate dropped very deeply. So we observed a drop on even more than 10% this year. We know that the investments and first of all, the foreign direct investments, the greenfield investments in Poland, has driven the Polish economy since 1990. And it was the systematic growth year by year. Especially last 5 years were really very optimistic. We may announce a lot of very interesting investments when Poland has been chosen by the global investors. And all of them were very complicated, not very simple. It was something that offered for the Polish students very interesting jobs. So we want to maintain this trend, and we do really offer some other changes in the regulatory framework that made your decisions even faster. What we can say and what we can offer. So we are together with the Ministry of Finance, inspired of course and driven by Prime Minister Morawiecki. We are introducing now the changes in corporate income tax. We try to observe what has happened in Estonia last year, and this is the amendment which we are offering. We also try to offer the special tax incentives for those who invest in automatization and robotization. We observed how well the research and development tax incentive has deepened in the Polish tax system. So we would like to have the same result after the solution which we are now preparing. And something that is offered especially for the big investor. The big investor means the investor that wants to invest more than 1 billion Polish zlotych or is offering more than 1,000 labor places. Or those who are in Poland right now and employ approximately 3,000 people. For them, we try to offer the special VIP passport. So we know that sometimes it is even more difficult for you. This is not tax incentive, this is not a government grant, but the discussion with the several administration here is even more difficult for you. This is what we want to offer. We're kind of a babysitting for every single greenfield investor, the big one who is going to invest in Poland. So this is after the long practice with the Polish Trade and Investment Agency. The president of agency is here with us, and this is elaborated closely with the agency and with our special economic zones. All this legal framework we want to offer you from the beginning of the next year. This is absolutely the key momentum and the key factor which we want to offer. Poland must stay, as it is right now, the most effectively selected country in the European Union, as it was in 2019, by the foreign direct investment place. So we want to become not only the third one, I'm dreaming about the first place, especially after British Brexit, and it is the United Kingdom, which is on the first place in Europe. But of course, so we want everything what we can to attract the investments as those which you represent right now. We know that with the strong collaboration with you, with your investments in Poland and the Polish academia world and the Polish small and medium-sized companies, we are really growing. And we do understand that this is also the opportunity for us. I'm saying not only about Poland. If you observe the whole Central European region, so you see definitely the land of opportunity. This is the way, this is the place when the nearshoring should be located at places, because we are the gate to the European market. It is definitely worth to be here, and we are doing everything what we can to make it even easier in the coming months. What I can offer to you from my side, of course, sometimes the titles and names of the ministers are changing, but the mindset of this government would become the same in the next coming years. We are making the amendments and the changes in the regulatory framework. I mean my ministry, always in a constant dialogue with the business. We never think that the administration is reinventing the wheel. We are trying rather to prepare the new wheel, but together with the specialists, so with the business and with the market. So let's stay in touch, let's collaborate together, and I do believe that both your companies and others are coming to, in this very uncertain period, especially in uncertain years, to Poland. Thank you very much.
Madam Deputy Prime Minister, thank you very much for running away from the R that Jacek introduced to the O, the opportunity. We also read this O as the offer of C, cooperation, which will be important for us because we can hear that there is a lot of things going on. To proceed with the event, I would like to finalize the opening part by presenting the partners of this forum, without whom it wouldn't be possible. So the main partners of the ABSL FDI forum are CIMA, Global Worth, and JLL. Event partners are CVC Capital Partners, EY, HSBC, Philip Morris, Grupa Kapitałowa PKP, Energetyka, Randstad, and Siemens. ABSL FDI forum is brought to you in partnership with Polish Agency for Information and Trade, PAIH, and Polish Investment Fund, PFR. And the event is powered by Bryn Media. Now, without further ado, we would like to proceed to the first part of the event, where we said we would analyze the current situation from the global point of view. To introduce the global point of view and the analysis, I want to ask the representative of HSBC, Janet Henry, Global Chief Economist, to present the analysis of where we are now. Janet, we are thrilled to hear your story.
Hello, everyone. So I'm going to talk about the outlook for the global economy. The first slide that you can see here summarises our global economic view and our growth forecasts for 2020 and 2021. Obviously, there's a lot of discussion at the moment about the shape of the recovery after this very sharp contraction in activity, which for most countries was mainly in Q2. China, a bit of an exception because it was first into the pandemic and was already bouncing back in the second quarter. But what you can see from that chart on the left-hand side is that although we are looking for a rebound in growth rates, the pace of improvement is likely to slow over the course of the next few months and even in the course of 2021. And for the advanced economies, by the end of 2021, we are still looking, in most cases, for countries to still have a level of GDP that's somewhat below where they were at the end of 2019. Now, we may not know the precise numbers, but that has significant implications, particularly for unemployment rates and, of course, the level of debt, both because of the contraction in activity and, of course, the scale of fiscal stimulus in particular that's already been delivered and will likely continue to be so. And I'll come on to some of those trends in a minute. But I want to start with just the growth picture so far, and what is already looking like quite an uneven recovery, and that's likely to continue to be the case. If we look, for instance, at China and the US, it's quite clear that some parts of the economy are already starting to revive more quickly than others. And in nearly every country, it's the goods side of the economy that's coming back a lot more quickly than services, because of course it is services that have been most affected by the suppression measures that have been put in place around the world by governments. We can see that in the bounce in industrial production that's coming through in China, And of course, in China, it's not just that they could get the factories back up to speed, it's that the exports are also tied into products for which there is still demand, even in a weak world trade environment. So exports of home computers in a work from home environment, exports of medical equipment and protective equipment has been very strong against a backdrop of a global pandemic. But in China and in the US, you've seen weak service sector spending, both because of government mandated measures and because people have a fear factor about going back to some of their previous service sector trends. But again, we've seen different impact of policies in Western economies, in the US and in Europe. A lot of the policy support has been aimed at supporting household incomes, whether it's by keeping people employed or in the US, by giving them very generous unemployment insurance, at least for a period, so incomes have not been as affected. In China, it's been more about supporting the corporate sector and public investment. But as the year progresses, and even as we go into 2021, much is likely to depend on the impact on the labour market, because already what we've seen is a significant shift in savings behaviour. Both in Europe and the US, if you look at that chart on the US household savings rate, you can see that it jumped to well over 30% during the most severe part of the lockdown, when people couldn't buy everything online and were not undertaking a lot of the service sector activities. That has now come down, but is way above pre-pandemic levels. We've also seen it in some decline in consumer confidence. People quite simply are not confident about their future employment prospects, and so savings rates are likely to stay elevated for quite a significant period. We've also seen that in savings behaviour across Western Europe. Irrespective of the income level, there has been a rise in household savings rates. But in terms of what happens in labour markets over the coming year or two, this is where the sector story will be quite important. This has so far been a very unusual recession because it's been so service sector dominated, and in particular, it's dominated the impact on labour markets in hospitality and recreation, travel, restaurants, bars, etc., cinemas. And you can see, for instance, when you use this Australia data, that those sectors that were most affected on the job side to start with have started to see some kind of an improvement, particularly in arts and recreation services and accommodation. It's been the same in the US. The number of people working in hospitality halved at the worst point. It's now only down about 25%. But getting back to that point about the level of activity, what we will continue to see is weakening demand for those jobs that more typically get affected in a recession, both because of income effects and because of changing in behaviour. This is when it extends more to even some higher skilled jobs and some professional jobs, and still means that we are still going to see this elevated level of unemployment, even if we're not seeing it yet because of the extent to which jobs are being supported by governments. Now, what does all of this mean for inflation, which is probably one of the questions I get asked about most at the moment? Well, there's obviously a lot to consider, but what a lot of people are concerned about at the moment is the scale of policy stimulus that's coming through. All of this increase in money supply, the extent to which central banks are buying government bonds, they're even nervous about the strength of the equity market and such like. But ultimately, for inflation to take hold, we would need to see a rise in wage growth coming through. Otherwise, it's just quite simply likely to squeeze real incomes and ultimately squeeze growth. And we basically are still very much in the low inflation camp, both because of this low level of activity relative to supply, but even in terms of the impact of these ongoing deglobalization trends, which were already evident before the pandemic, but have shown no signs of abating in recent months, particularly given the tensions between the US and China. So I thought it was worth showing you this chart because it shows you what's happened to US inflation over the course of the last 30 years, which is that as a consequence of technological advance and automation, as well as positive globalization effects, the US has seen persistent disinflation. goods prices have fallen by about 1 to 2% per year. But because consumers, they may not have had strong wage gains, but if wages were growing at 2 or 3%, it meant that they had more income to spend on services, stronger growth in services, and actually higher price inflation in the service sector. But inflation expectations are very, very anchored. So if these deglobalization trends intensify as more production comes back home, be it to the US or Europe, as a consequence of shifts in supply chains and more restrictive measures in tech and such like, and perhaps medical supplies, then we could start to see higher goods price inflation. But as was the case back in 2010, when the dollar was weak, or indeed when 2018, when the US imposed tariffs on imports from China, on those occasions, we did see higher goods price inflation, but it squeezed real incomes, that squeezed areas of consumer spending, and it meant that we had lower service sector inflation. So if you don't see it in wage growth, which I don't think we're going to see in a world where we still expect unemployment, even by the end of next year in the US, to be double what it was pre-pandemic, it's not a backdrop in which companies are going to be paying higher pay gains. But what does that mean for policy? Well, there's still plenty in the toolkit, as central banks like to keep telling us. But this is the list of options. There isn't time to go through all of them. But there is a lot of discussion at the moment about further reductions in negative interest rates. We are not forecasting any more, but if any central banks do it, it will not be the Fed. It's more likely to be the Reserve Bank in New Zealand or even an outside chance of the Bank of England. We do not think the Fed will pursue it. More likely for the Fed, it will be more QE and, of course, forward guidance, with them having told us that they are already willing to overshoot their inflation new flexible average inflation target of 2% per year. They're willing to overshoot for a period moderately, having undershot for so long. And of course, this is one of the factors that's weighing on the US dollar recently, given the expectation of negative real interest rates being around for some time. Likewise, for the ECB, we do not expect further reduction in negative interest rates, but we expect more in the way of asset purchases. And no doubt, depending on the pace of recovery, there will be more discussion about monetary financing or even full-blown MMT, which would obviously have a lot more other additional consequences, but many would relate to exchange rates. But I really want to finish up with a couple of points relating to debt, because of course, even central banks are telling us that as much as they have other issues in their toolkit, much of the hard work from here will have to be undertaken by governments. Fiscal stimulus will need to remain in place even as the economy recovers, but because the pace of improvement is likely to slow, and income inequality and, of course, job creation are going to be some of the pressing challenges. But we've already seen a big increase in government debt. Now, government debt started this pandemic at quite a high level, and of course, it's just been made worse by the contraction in activity and by the extent of government spending that's come through in order to support jobs in particular. Well, we're thinking about high debt. How will it eventually be paid? Well, there's only so many options, and I've listed them here. Obviously, every government may hope to grow their way out of it, and I'm sure there'll be all sorts of creative accounting methodology to keep some of this debt off balance sheet and perhaps pay it off by future generations. But ultimately, they will hope to grow their way out of it, as many Western economies did after the Second World War. The other options are inflation, default, austerity, financial repression, or of course, taxation. In the emerging world, we expect some variety of all of these. In fact, there's already nearly 100 countries that have been seeking some kind of IMF assistance, and we've obviously already had a default effectively in Argentina. For the advanced economies, I think it will largely be reliant on the last three on that list. Austerity played a big role, particularly in Europe, in the wake of the global financial crisis. There does not seem to be the public or the political willingness to deliver austerity this time. For now, it is kick the can down the road, financial repression, interest rates, nominal interest rates staying at zero or negative for the foreseeable future, real interest rates staying negative, And eventually, we think that we'll be looking at a world of higher taxation, particularly in the way of wealth taxation. So overall, there is some signs. The initial turn in the recovery is something like a V, but it gets harder from here after what will be reported as a Q3 bounce back in growth. Yes, there will be growth divergences within economies, there'll be growth divergences between economies, but the main legacies of this pandemic will be higher government debt burdens, which brings policy challenges in itself, in addition to the inequality issues. And for monetary policy, it will have to stay very loose for the foreseeable future with very, very low interest rates. Thank you very much for listening. I'll conclude there.
Janet, thank you very much for presenting the current situation from the broader perspective. We did hear some scary information about the rising unemployment. We did hear that the debt of the countries may be reflected in the future taxation. We do hope that Poland will be in one of the parts that reacted quicker, faster and better to the situation. So we do hope that the taxation will not change as much as it may somewhere else. But to hear the second analysis, I would like to ask to the stage the representative of CIMA. It's Andrew Harding, Chief Executive of CIMA. Andrew, the floor is yours, and we do hope that you'll have some positive information for us.
Thank you very much indeed, and good afternoon, everybody. It's a great pleasure to be here. I never thought I would enjoy going through airport security as much as I did this morning at Heathrow. It's the first time I've travelled since the middle of February. Finance. How can finance? How in particular can our accounting and finance operations lead businesses out of the current problem that we're in? That's what I'm going to be talking to you about today. First of all, just to let you know what we are, what the organisation I represent is. CIMA is the Chartered Institute of Management Accountants, a professional body founded in the United Kingdom in 1919, initially founded by Unilever and several other industrial organisations. In 2017, we came together with the American Institute of CPAs to create a new accounting association, which represents 650,000 professionals across the globe, 33 offices, 179 countries, etc., etc., etc. The important thing for you is 3,000 of those 650,000 are here in Poland at the moment, and that number has been probably started from pretty well zero a decade ago. Finance has been changing. Finance has been changing very, 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 very quickly, and I think it's fair to say, if finance is going to lead us out of recession, if finance is going to lead us into recovery, it's not going to be the traditional finance that many of us are familiar with. Finance is shifting, and it's shifting from the left of this diagram to the right. Finance used to be about collecting information and providing insight from that information. And many, many business service centres were set up to do exactly that: fast, efficient processing of transactions and analysis of those transactions. But we're shifting very, very quickly. That sort of thing is becoming automated. The value is moving to the right, and it's about how well finance influences and the impact that finance has on the business. Often described by corporates as finance moving from the back office to working alongside the business. Now physically that sounds rather odd when they're putting things into business services operations such as in Poland and other, India and other parts of the world. But it is all about connectivity, and it's all about how that works. The kinds of things that we've been seeing as we've gone through this. The first thing that I started to do was to speak to some of these 650,000 people across the world, and we started in China. We started in China because as Europe was shutting down, as America was shutting down, China was going, hey, we're just coming out of this. So let's talk to CFOs from China about their experience and report on that. And we got a really positive feedback from doing that, partly because it gave people hope, partly because it gave them insight, and finally, it gave them inspiration. But one of the most telling things which I heard from one of our Chinese CFOs who leads the business services operation for Asia Pac for a major public company. He said, the simplest thing is, he said, I've split my finance team into half. My ACCA professionals are doing 2019 year end. I'm working with my SEMA professionals to keep the business on track, to reset us, and to plan for how we work in the future. And that's how it's moving, this shift from left to right. This increased value of the ability to influence, the ability to impact. This necessity for finance to be looking forward. Looking backwards, financial reporting, generation of tax computations, all of that sort of thing is becoming a given. The differential for finance and the differential which is going to attract investment is the ability for finance and the people in finance to be looking forward. To have a look at the sort of things that have been going on, this is how McKinsey describe it. They describe businesses as responding, enduring, innovating, restoring, and then reimagining. And finance has been at the core of all of that. And I'll quote you a British CFO who works in the leisure industry, and he describes 4 stages. His stages were panic, stabilize, reset, and then thrive. And very similar to what McKinsey have described, except with a little bit more drama and a little bit more fun. What he's actually done is he's managed to create far more impact in that statement than McKinsey have managed with their more scientific approach. And we are seeing change. The sorts of changes that we're seeing, we were talking earlier about commercial property. What are we looking at in commercial property? Well, if you talk to industrial businesses, what are they looking at? They're shifting from office space to warehouse space. We want less office space, we want more warehouse space. Let's adjust our spend, let's talk to our landlords, let's see what we can negotiate. And the reason why they're doing that is because what was just in time suddenly became just too late. When that happens, your business model changes. Your relationships change with your suppliers, with your customers, with all of your other stakeholders, because your business model doesn't just look at how you make something. It doesn't just look at your processes. It looks at your whole ecosystem. It looks at your relationship with government. It looks at your relationship with suppliers, with customers, with the communities you work in, with your workforce. And all of that needs to be taken into account. And that's what modern finance has to build into its forecasting, has to build in to its planning, has to build in to its vision for the business. If it's not taking that holistic view, then it's not looking at its world. It's very well documented that today 20% of a business's value is reflected in its financial statements. Go back 40 years, that was 80%. That shows you very clearly traditional finance is hugely, hugely undervaluing and not accounting for the whole business. And that is what we're moving forward to. So we're making this move from providing information to creating impact on the business, driving change in the business, moving from surviving to thriving. And that is how finance can drive the recovery, both of businesses, both of individual businesses, and of the broader economy. And it's also how economies with the right skills, with the right finance skills in place, are going to attract the investment that they're seeking to bring in, which is going to enable them to, if you go back to the HSBC analysis, grow their way out of the recession, which is the best way, and it's the best way to grow out of both recession and to grow out of debt. So, that's me. Thank you all very, very much. I look forward to spending the rest of today with you. Thank you.
Thank you very much, Andrew. And please stay on the stage.
Thanks.
Because you'll be a part of the next panel. If you see, we still follow the R that Jacek introduced, but I like that R much more. Reimagine the business and reimagine the world. And I think this is something that we can stick to when we are planning the future. Now, to talk more about the future from the global perspective, I would like to ask to the stage the moderator of the next panel, Marcin Petrzekowski, Regional Head Commercial of Southeastern Europe and Nordics from Standard & Poor's Global Ratings. Marcin, please continue with the global approach to the analysis of where we are now.
Great, thank you very much. It is a pleasure to be here. Indeed, I do confirm it's not often that I have such a high energy coming to a room full of people. So I have a chance to moderate a panel where we've invited a great lineup of speakers. Maybe first allow me to introduce the speakers, invite them over to the stage, and then we can commence. So first, Artur, Chief Operations Officer at Global Wharf. If I can welcome you to the stage. There's Artur. You can remove your mask. It's safe. This is the safe environment. We've sanitized ourselves. Then let's move over to Ronald. Ronald from Honeywell, President for Central and Eastern Europe. Welcome, Ronald. Great. Over to Andrew, who you already had the chance to introduce yourself. Chief Executive at CIMA. Joren from Randstad, the Regional Managing Director for Poland and Eastern Europe. Hello, sir. Welcome. And last but not least, Paweł, a COO and partner at EY. In Warsaw, I guess, yeah? Beautiful, good. Okay. So actually my work is quite easy to moderate this panel. Why? Because I listened very diligently to what was said from the very beginning. And there's actually the narrative that we spoke about when pulling together this panel, it speaks very nicely and it's been in a way presented. So my role is relatively easy because what I now need to do, I need to give you a synthetic view of what was mentioned up to now and then open the floor for my reputed colleagues and speakers to carry on looking at that narrative from their own perspective. So what we've heard is that change and what COVID has made has created has a significant impact on many levels. You know, society, human interaction, business, government. We live in a different time, and we need to acknowledge that. I've read a few research recently, and there was a statement being made by someone in the US who said that, you know, we had the 60s, and then the 60s were dreadful, and they paved the way for the advent of 80s, 90s, and then the 2000s. So a lot of people are saying that, you know, 2020 could be like the 60s. It could be a year which is dreadful. You go through it, but it paves the way for a big growth and a big opportunity agenda. So keep that thought in mind. Why? Because the change is unprecedented, both from a magnitude point of view. Think about the magnitude, the impact. It being very holistic because it has impacted the majority, if not all industries, if not all countries across the world. This is, again, a very unique situation that the world is in. And it's very democratic. Why is it democratic? Because there's no way to escape. Everyone has been impacted. Whether, you know, whatever business, whatever society it is, the impact is effectively, you know, you can feel it everywhere. So that's very, very important, yeah? And then one additional point to make is that because of digitalization, because of the way, you know, the technology world has propelled, this also meant that there's literally nowhere to hide. There's literally nowhere to hide from the impact of COVID. So, you know, let's not fool ourselves. The way investments are made will also dramatically change. The world of FDI is going through a complete reshuffle. And how Poland looks on that map is a very important question. One good example that I can give you is that more and more investors today look at ESG criteria than ever before. ESG being environment, social, and governance. Remember governance. Why? Because we have a big framework of talking about policy here. So change is huge, And change means that we as market participants, and this was mentioned, we need to reinvent ourselves, okay? We need to adjust the way we operate. Flexibility, being agile, being open-minded, being dramatically focused on the bottom line requires us to refocus the strategic angle. And this is what we will talk about, yeah? There will be winners, think about Amazon, but there also will be losers, think about airlines, yeah? So the world is not an easy place to operate within. And if you are surrounded with so many changes, there's one area that you need to have constant, yeah? And one area for foreign direct investments is the environment, you know, is the playground, is where you operate, yeah? Everything around us changes. So having, you know, a stable platform that you can, you know, have some confidence in is super important. So we mentioned the point around stability of the legal system, the tax system, the regulatory aspect, governance. That's what I mentioned by what investors look at, ESG. Remember that, yeah? So these trends will only intensify. They will only intensify. So, you know, in a world of unprecedented changes, in order to eliminate the number of unknowns, the platform is very important. The environment is very important. So what we want to talk about here is A, what changes do we observe for the industries, and how and why is this platform, why is the operating ground that I invest in so important for my ability to not only survive, but to remain competitive. Airlines will not be competitive going forward. Amazon might be competitive going forward. Okay, so that's the topic. A bit of drama added to the situation. With that, maybe let me turn to Artur. No, maybe let me first turn to Pavel, because I think let's stay on this high-level point. Yeah, EY, you guys talk to many clients. You see different industries. You have a big business. You guys are big investors. How do you see that from your vantage point?
Yeah, well, of course, all those topics are present in the conversations we have with clients, with you guys, actually. The word, not starting with R, but starting with F, really repeats every single time, is the flexibility. The flexibility, I mean here a lot of aspects connected with the regulatory environment, but it's connected also with the investors show. And what the investors say. In our annual European Attractiveness Survey, it became quite clear that 1/3 of all FDIs are put at stake. 10 of them already were declared by investors it will be cancelled. 25 will be delayed. But we asked those questions in February or March this year. Yeah, right now, I'm afraid this number will be higher. In order to adapt to this, many companies need flexibility in all aspects of regulatory framework. And you know, we heard today a Deputy Prime Minister showed other ideas about incentives for robotization, incentives to invest in R&D. Actually, many players in this room are beneficiaries of state aid in the form of cash grants, tax exemptions, R&D grants, and so on. And what I see as a very important element of this ecosystem is to utilize the power not only Deputy Prime Minister has, but all of the stakeholders, the officers, the clerks at the ministries, to really utilize it for the benefit of the beneficiaries of the aid, within, of course, the limit, within the European Commission regulation, and so on. But really, this may have an incredibly important aspect when thinking and wishing to reinvest, because all good experience right now, this year, will be remembered forever. I'm afraid also bad experience this year will be remained, hopefully not forever, but very long.
That's a great point, and I would underline the flexibility aspect. Flexibility is about people. We now operate a world of, you know, human capital. So maybe, Joran, if you can comment from your perspective, you know, Randstad, you guys being close to the human capital side of things, how does that flexibility aspect translate into what you're seeing?
Well, thank you. I can definitely connect to the word flexibility and flexible solutions when it comes to the labor force. There are a couple of trends that are visible when it comes to the current situation, and let me mention a few, otherwise I will take too much time. But first of all, working from home works. Working from home is something that currently for many companies is a solution and we all benefit from right now. We have to take into consideration though, that when it comes to belonging, when it comes to purpose, and when it comes to culture, this is a topic that we really have to take serious. Especially in the industry that we represent here, the SSC and BPO industry, we have to make sure that we find ways in order to make sure that we have people and workforce available, skilled workforce. In the introduction it was said that digitization is key. Well, for sure the race on digitization is on. Let's make sure that we have the right people, let's make sure that we keep the right people, and also let's make sure that we train the right people, because you might be surprised, or maybe you're not, even though that the unemployment figures are not in the same level as in different countries, and in Poland is scattered over different industries, we do have scarcity in certain profiles. We have to make sure that we upskill and reskill our resources to make sure that we can make work of our future in terms of the growth that we want to achieve. We want to be flexible, we need to have the right workforce, and therefore we need to be able to train. That means reskilling and upskilling, and it is something that is a topic close to my heart, because this will make sure that we, as a sector, the SSC BPO sector, will maintain our competitive advantage, and we will make sure that from investors' point of view, we maintain our interest as a country. So that's what I would shortly like to add to the discussion.
Great, thank you. I can then pick up the ball around upskilling and reskilling, which you've underlined as the key component. Being lucky to have Sima on the panel. If Angie, if you can elaborate a bit further on that. You guys are all about reskilling, reskilling and improving the workforce. So can you give us a bit of a view?
Yeah, sure. Let me try and help you put some meat on the bones of that. The idea of skills. Today it's estimated that the half-life of a typical skill is 4 years. If you can imagine that, if you were trained to do a job in 2012, only 25% of what you learnt in 2012 will still be relevant today. That's quite a challenge. Go back in time. Traditional apprentices learnt crafts that would serve them well throughout their entire working life. Now that's much shorter. Traditionally, things we've looked for growth, a young, well-educated workforce, that drives growth, that attracts investment. But increasingly, the numbers of young people coming through with those new skills are not enough to fuel demand. We surveyed finance professionals across the globe in 2017, and only 20% of CFOs in 2017 said their teams had the skills they needed to take them through the finance transformation and meet the ambitions that they had. We redid that survey 2 years later, 2019, and that number had dropped from 20% to only 10% of CFOs believing their existing teams had skills. So it's, as we heard, it's about reskilling, it's about retraining, it's about relearning. And it's not about, that's not just about older workers, that's about mid-career workers, that's probably about anyone who's over 30 years old. The skills are going to be stale, investment's needed, it needs to be refreshed. In particular when we're looking at technology and robotics, as we heard before.
Yeah, which moves us nicely back to the S in the ESG, being the social aspect of investing in people. But I like one point which was strong. I don't think anyone picked it up. Working from home works. That's what we've heard. Does it, Artur? How does that impact your business? You guys are in the business of real estate. You guys are in the business of hard assets. Working from home works. Does it work for you?
No, it doesn't work. We've been facing this dilemma for 6 months very intensively, but that's not the first time when we faced this dilemma. More or less 7-10 years ago, with the development of broadband internet, first inflow of digitalization everywhere, we started considering seriously whether we can move our desks, computers to our houses permanently, and after months it turned out that, of course, it works 1 day per week, 2 days per week, but permanently it doesn't work. We are less productive. And of course, this time it wasn't as smooth as possible, as smooth as it was 7-10 years ago. This time, all of us had to move to our houses immediately. And of course, as a landlord, one of the largest landlords in this part of Europe, owning 1.2 million square meters, we prepared our more than 40 projects ready and safe for our tenants, namely speaking for employees of our tenants. Of course, we saw that the usage of offices dropped immediately at the beginning to 5 to 10%, but right now it's around 32%, between 30 to 40% of employees on average come to offices on a regular basis, and this ratio is increasing. Of course, we have this dilemma because these two trends are strong. Working from home, on the other hand, we for sure need to change our approach to the way how we work, how these spaces are prepared for our employees, for our tenants. For sure, one era ended. We won't be able to keep offices at the ratio of 6 square meters per head. That density is impossible in current circumstances. So these two trends, working from home and lower density, they are still not verified, identified. So we are facing this dilemma and how it impacts the demand for the office going forward.
Great, thank you. I was actually expecting that type of an answer. So let's then later talk a bit about what more you guys will be doing to adjust to it. Ronald, over to you. You guys are a business that is extremely diversified from a product perspective. You operate across different industries. So I think to wrap up the first set of questions, if you can look at it a bit holistically, as you see, the full constellation of your business, what is the impact and how does that drive? How do the trends drive your future behavior?
Okay, so yeah, I am hearing my colleagues, and I mostly agree to what you say. My perspective, and I'm fortunate on working for a global company which runs, on a daily basis, I look at it as 24 different lines of business, and they are much more graduated if you go down. So you get a little bit of flavor that the world is not black and white, of course, So you see it really depends what's happening. We have to be clear that what we see right now in all the industries, in all the businesses are early reactions on something which still is not finished, because nobody really know what is the impact. If I heard today Mr. Milewicz saying that we came out as Poland very much better than the others, that's true. Let's hope it stays like that, right? So we need to be a little bit cautious with predictions. We need to look how the eventually second wave will impact it, but also the real impact on the businesses. There was a lot of government stimuluses and all of that. So, but when you're coming back to the different lines of business, you see, if you have factories and you have to have physical work to be done, of course, working from home was not a topic, right? So clearly here, much more work has been put into getting those operations in a safe manner in this environment. While when you look at the kind of work where you have very well defined office work, this is perfect for home office, right? If you enter the area of innovation, then this topic will become a little bit complicated because, and my own experience, I tend myself to treat like half of my day is the standard work, but the other half of the day I need to think of things for the future. I get out of ideas. If I don't see people around me and start to hammer against me with different ideas or challenging me, and having it permanently, not having the people around you, is a little bit more complicated. So I think we will experience many different things. But one thing which I strongly believe and which is already visible is this deglobalization. And it's not a deglobalization because of some kind of ideology, but of the reality. We recognize that being exposed to supply chains which are not working in situations like that is something which puts businesses nearly on collapse, you know. And if you think at the early stages, and I can say from my company, in the early stages, our bigger problem was to getting raw materials. It was a problem to getting things moved from China to the US. And guess how cheap the flights were. You know, a cargo plane at that early in March or in April, a cargo plane from Shanghai to Los Angeles, that was a business, you know. So I think, on one hand side, I'm really thinking that, especially for Poland, a country which still, if you forget all the crises, we still have a lot to catch up, but we already have a very stable and big domestic market, which gives us a little bit less exposure to the import-export. The quality we have, if we have the right environment, as you said at the beginning, we really can be a beneficiary, but the competition is just around us. All the other Eastern European countries are fighting for the same investors, for the same ideas, and it's shifting still further to the east. Okay, thanks.
Yeah, no, it is global. It's not only Central Eastern European countries, it is a global competitive market. I fully agree, and thanks for flagging that. And I like your point around, you know, thinking ahead for the future. Deglobalization, good trend, but then let's take that further. If I can ask you guys let's go back to this environment point. You touched on it already, Ronald. Thanks for the opening. So how do you see what are your asks for the environment? How do you want the environment to be shaped? And let's not only say it needs to be stable. I mean more like, you know, holistically for the future in terms of what we're seeing. How should the environment change, or maybe shouldn't it change, or what aids would you see helping your business to thrive, as the word was used before? Pavel, if I can start with you, you know, trying to tackle that type of a question.
Well, that's really tricky one, because we see the and different aspects of the environment influencing us. We take a lot of the education, and I really like the thought that Andrew brought to in the conversation, because it's, of course, that de-learning, this is something we hear already, but the speed, the pace of the change, it's something which it's completely unprecedented, really, and we need measures for unprecedented times, I think. It goes together with my first comment, but I really feel that we really need this kind of ability to be agile, yeah, in a sense that if something doesn't work, let's have a discussion on this. Let's agree it doesn't work, and let's change it. Because if we educate people in a dead end way, it doesn't make sense. The same with number of solutions probably for in other aspects, but I would say let's have courage to make decisions to change things, because the pace of changes we're facing is completely unheard of.
Yeah, being the moderator, I have the privilege of translating what Pavel just said. The environment needs to be stable, but if something doesn't work, change it. Yeah, and I think that's a big, to policymakers, that's a very important ask. Yeah, we need to adjust on the go, because the world is a very competitive place, and if we don't, we're out. So I think I love that. Thank you very much for sharing that. Yaron, over to you. Same question, and try to be bold. And just like I think Pavel set the bar high in being bold.
Try to be bold. Try not to repeat what Pavel said, but first of all, what we need, we as a company, but also our sector, we need stability. So let's say the number of changes from a legislation point of view or tax, please keep it as simple as possible, because we have enough. And then when it comes to the speed of implementation, let's do it fast. And if we have to adapt, or if we have to change, like said before, let's make it very agile in order to do so. Then a little bit of a different angle, but it also defines the environment, and I bring it a little bit back to the workforce, because the growth rate that we as a sector expect for the coming years is substantial, and therefore we need a workforce. And in order to make sure that we have that, we need to educate, we need to upskill and reskill, and I would even say that we have to add the diversity and inclusion concepts in order to make sure that we get workforce from all parts of our society involved. And if we can do that, and if we can achieve that, then we can have initiatives, both from the public and the private sector, preferably, by the way, in a sort of partnership, and that will be part of the solution, I would say. So it is more or less if you want to have it bold, a cry out for let's cooperate and let's embrace this topic together.
Great, thank you. I like that, especially in a country where diversity is becoming an issue. It's a very strong point, and inclusion is super important. I would only underline the fact that whomever wants to throw the bomb at us saying that there is no women on the panel, you're right. We did invite a woman. She couldn't make it. Though what we did, and I really, stand behind our speakers here, is that we've consulted the feminine leaders of our organizations to make sure that we represent a balanced view. And this is not a statement. It was an act of, diligence. So rest assured that what we present is it represents the full diversity. Though, sadly, we don't have a woman just because she couldn't make it. On that note, though, I would like to continue that topic. And then, you mentioned diversity, you mentioned inclusion, makes a lot of sense, and it's bold and it's good. So again, Andrew, over to you. From a more global perspective, the value that you see in that and how to achieve it in a more of a micro perspective, how to achieve it from a business point of view.
I think if we all had the answer to that, we wouldn't have the problems that we have around diversity around the world. But we have seen changes. We have seen things shifting over the years. The accounting profession, particularly in the Western world, has traditionally had a gender diversity problem. In Central and Eastern Europe, that hasn't been the case. I started working here probably in the early 1990s. And in those days, the issue of diversity was men worked in factories, women did office work. The first generation of accounting professions in the 1990s in Poland and across Eastern Europe were majority female, and very, 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 very successful as a result. So for me, it's about giving opportunity, and I think sometimes you have to push on that. It's not going to happen naturally. I think for Central and Eastern Europe on the gender diversity thing, it was happenstance. It was fortunate circumstances which allowed that. I think for other parts of diversity, we have to push that. The other thing to recognise is diversity in the United States, where I do quite a bit of work, looks very different to diversity in Southeast Asia, which looks very different to diversity in Central and Eastern Europe, which looks very different to diversity in the United Kingdom, and indeed looks very different to diversity in Southern Africa. So there aren't. You can have global. If you like, you can have global ideals, but action has to be local. Global principles, but actually planned local action to suit local markets.
Great, thank you for that. So I value that, and it makes a lot of sense. And you're right, there's probably much catching up to do on that front. Moving the discussion back to the core, which means policy. Like you've mentioned, Artur, from a global perspective, you guys see the pressure, you might need to adjust. Is there anything from a framework environment perspective or any of the points that were mentioned here that resonate with you? Or do you guys have a different view? Or is there anything else that you need?
Well, firstly, real estate sector in this specific discussion is to support, firstly, to maintain these 350,000 workplaces in the sector of business services, but also to support the inflow of new investments in this specific sub-industry. focusing on our needs, what we need is definitely clear and predictable legislation. Maybe it's high time again to mention missing REIT legislation. We are one of very few countries in Europe which still doesn't have this specific regulation supporting real estate sector. But as a representative of office sector, well, we support all initiatives allowing for inflow of further companies from the services sector. So firstly, proper education in line with the needs of this business, listening to our tenants in a couple of over last years. The sector started having problems with the availability of talented, skilled young people from the university and the quality of how they were prepared to do their jobs. So that's one thing. So specifically as the sector, we don't need a lot. We do support all these initiatives which can allow for further development of business services and their inflow to Poland.
Thank you. That resonates nicely. Thank you. So, Ronald, you launched this in a way. You were like, you initiated this school of thought. So, how does that all sit with you? Is there anything else that you would add in this constellation, like representing a company which is, we said, manufacturing, very difficult, very different in terms of you guys operate? Is there anything else that you would want to add to this list, to this wish list?
Yeah, and it's a pretty simple thing. I mean, let's look at all the people who are coming to Poland, working in all the service centers, or look at the existing ones, Polish people who are working, and look at the age. They are very young people, you know. So we sometimes in business forget that people come to work, but this is part of their lives. So I would put here very strongly the lifestyle moment, and think of why we have Silicon Valley where we have it, you know, because there was a great business environment, but there was also a place where everyone wanted to live, and then the things are coming together, right? So, and that's again to which brand of Poland should exist in the world. Poland should be a country where everyone, doesn't matter where he comes from, should be really, really striving to come here. And actually, if you talk to the foreigners, to the young people, and I just employed several of them in Katowice area, they love to work here, you know. So let's keep it. Let's not screw it, and let's keep those people being motivated to go to our country. And then you get the diversity aspect fixed, you get the labor shortage fixed, you get actually everything fixed what we discussed right now. Okay.
That's a great summary, thank you. We still have 1 minute left, so I'm going to, you mentioned young people. We have a lot of young people, so let's imagine let's prepare ourselves to 2030, symbolic year. And one of those young people come to us and ask us, in like one sentence, how would you describe 2020? How would you describe 2020 in one sentence, quickly, briefly, from this side to the end? How would you guys describe 2020? Imagine you're in 10 years' time, your son, daughter asks you. Go.
Helped me to really identify what's important.
You lost me there.
When my son or my daughter says, what happened in 2020? I said, this is the year which helped me understand really what's important.
That's great. I love that. That's beautiful. Thank you very much.
I hope my kids will tell me or say to me that 2020 was indeed a turning point.
Yeah, I fully agree.
I hope to say to my kid, listen, that was actually a year of opportunity.
Great. Thank you.
Let's convert these uncertainties, unprecedented uncertainties into our power strength going forward.
Great, thank you. And last but not least, our guest from abroad.
I think I'd say 2020 was the year when we threw away some old preconceptions and we reinvented the way the world is today.
definitely. And we lost all our air miles, so we went back to square one. Beautiful. Thank you very much. It's been a pleasure. A round of applause to the great speakers.
Marcin, the panelists, thank you very much for describing the world of 2020 in 10 years' time. We did hear a couple of sentences that describe the current situation. We live in a world of changes, but there is a deep need of stability, which may be contradicted by flexibility and the fast pace of all the changes. I think the pace of the changes and the unexpected described today. This concludes the first part of our agenda. We are going to have a 15-minute coffee break now. So please get back to us in 15 minutes where we will have the panel with, once again, Deputy Prime Minister Jadwiga Emilewicz, and we will be able to grill her, going deeper into what she proclaimed as the opening for cooperation. Thank you very much and see you in 15 minutes.
Czy już mogę? O, jest dźwięk. Raz, dwa, trzy. 1, 2, 3, raz, 2, 3. 1, 2, raz, 2, 3, 1, 2, 3. Raz, raz, 1, 2, raz. Raz, 1, 2, 3. Raz, 1, 2, raz, 1, 1, 2, 3, 5, 6, 1, 2, 3, 4. Test, test. 3, 3, 3. Raz, 1, 2, 3. Raz, 1, 2, raz, 1, 2, 1, 1, 1, test, 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 3, 3, 3. Czy mam jeszcze coś mówić? Czy tyle ci wystarczy? Dziękuję.
there was a closed meeting with the Deputy Prime Minister trying to get more information and insights of what she mentioned in her initial speech. But now we will have her in the panel, so there will be more time and more opportunities, including the audience, to discuss the topics that we are ready to discuss and to follow in the coming months. So I would like to initiate the second panel, and Lady Prime Minister will be the last person that we'll invite to the stage. We wanted to start the second part of the discussion according to Alfred Hitchcock's rule, that first there should be an earthquake and then we should build up the tension. So we would like to start with Deputy Prime Minister Emilewicz. Sorry, I wasn't aware of that. My mask was interrupting what I was saying. That's the next lesson of COVID. So we would like to start, as Hitchcock said, with the earthquake. That's why we wanted to initiate the discussion with Deputy Prime Minister Emilewicz, and then we would like to end it up with the Prime Minister. That is actually the head and the author of all the regulations and all the ideas that may help or may disturb us. To start with a strong statement, we want to discuss the topic, will the effects of crisis, and that's what's important. Not the crisis itself, but the effects that we are living with right now. Will they boost the FDI in Poland? Will they bring the benefit, or will we be able to just suffer from the fact that we did not expect what has happened to us? So I would like to invite to the stage the participants of the panel. Iwona Hojnowska-Haponik, Business Consulting Director from JLL. Krzysztof Krawczyk, Partner CVC Capital Partners. Michał Mierzejewski, Managing Director, Philip Morris Poland and Baltic States. And Mariusz Kondraciuk, member of and head of Siemens Infrastructure. One question, if we could keep the middle space for Mrs. Emilewicz, she just ordered her tea. And I guess we're ready for the Deputy Prime Minister. So as I mentioned, we had the meeting where we discussed with Mrs. Emilewicz what could be helpful, the four fields in which we can expect the support, but we can also provide the support for the government. It's the legal legislation, it's the tax legislation, it's the people, human values aspects of investing in Poland, and it's very clear and transparent set of rules of strategic or main investor. She agreed that the government, while working on these four fields, will be cooperating with ABSL, but also with the special team of experts that will be at the disposal of the government when they come up with certain regulations or ideas. So we know that it will be possible for us to be in touch and to monitor the changes. Now, most probably in 2 weeks' time, we will get back to Deputy Prime Minister Emilewicz with information that, because she has asked us a couple of questions. With the answers, she also requested information on who could be considering investments if there was a positive climate. For us, it's not the name of the company that's important, it's more the numbers that may convince the Prime Minister to be a little more open and to be more supportive of the new investors. So if there is any chance that you may provide information on the size and pace of the investment, you can catch me at the networking coffee break. Now, welcome Jadwiga Emilewicz, Deputy Prime Minister and Minister of Development, to the panel. Madam Prime Minister, we have heard your opening speech that has made clear to us that you are working on the set of regulations and that you are open to work on those regulations with the support of business. Now, we would like to discuss among ourselves and provide you the information on how we read the effects of crisis. We don't want to concentrate on the crisis itself. We want to see where we are right now and what the suggestions or what the requirements of business could be so that we can move faster. I would like to start with a representative of Siemens, as this is one of the oldest investors in Poland with various activities. Where is Siemens right now with the effects, visual and touchable effects of crisis, and what would be the main aspects that we could proceed with?
Just 9 months ago, none of us would even imagine in what situation we will meet today. And of course, the environment has changed dramatically. It influences companies, business, also us. And well, we try as a business to find these challenging times as our opportunity. We try to really build something new on that. It was mentioned today, kind of new reality to describe this new situation. I definitely prefer to say this is a new normal, because when you say new reality, you still consider how to get back to the situation that is more comfortable for you. I strongly believe that we moved somehow on the axles, and then we will already not get back. We can only move forward, and this is how our company is trying to react. We, for example, already established something just called new normal, which means we completely changed the model of work with much more mobile contribution, mobile work to the work time. What we do mostly now, we basically care about safety of our own employees, and we care about safety of our customers. We strongly believe, I strongly believe, that this is the way that ensures continuity of our operations and future business. As I said at the beginning, we try to find new opportunities. We strongly push digitalization, for example, Industry 4.0, and those times very much support that kind of approach.
Thank you very much. Digitalization is always coming up as one of the ways to cope with the new reality. Maybe I can turn to Philip Morris. Michał, you're one of the oldest and one of the largest investors in the business services sector in the hub that is Kraków. You also have a very wide variety of processes. What would help you if you spoke with the headquarters? And in the headquarters you have one of the, I would say, most recognizable people, Jacek Olczak, who is the COO, global COO. What would you help to talk to him and convince him to bring some more complexity to Kraków or to Poland?
First of all, if I will ask Jacek to bring more investment to Poland, he will tell me, my God, we have 7,000 people here working in Poland and giving the services and the products around the globe. So first of all, I think that the big question is how to retain the investors in Poland. Because I think this is the key question. If the current investors will be happy, they will have a willingness to reinvest and build the new workplaces and the new things. But I think all of us are thinking about the stability of the legal systems, and was also touched during the meeting with the Prime Minister. Another side, each of us have in our mind the wishful thinking and the list of the regulation we are dreaming that they will be changed. So this is something in the way dealing with ambiguity, because from one side we want to have stability, on the other side we have a list of the laws that should be changed immediately. And to be very fair, when I see Poland being a member of the management board of Philip Morris for Europe, I think Poland is competing with other countries for the investment. And what is missing in Poland now, I think this signature why Poland is unique. I think we are big as a country, we have qualified labor force, but what is this something like a different special in Poland that companies can produce here, not in Germany, not in Czech, not in Spain? And I think if I will be in the shoes of the government, I think this is very tricky and difficult, especially that we are not island, we are a member of European Union. But I think I will start to have something like a discussion with the sectors, because each of the company are under the transformation mood. And I was thinking that only my company is transforming from tobacco business to novelty tobacco business. I was surprised that each of the companies, all colleagues are transforming. And all transformation needs to have something like a speed of the regulators that they can catch up with our companies that they are big and investing a lot of money. So if I will be in the shoes of the government, probably I will start to talk with the industries that they are willing to transform. What government can do, that Poland will be first in the globe with the new approach with the regulatory. And I will give you an example from my industry. US, 2 months ago, they passed the law that tobacco products we're producing, these novelty tobacco products, can be recognized as less harmful because they are following the science, all these things, they recognize this. I think this is needed to have a courage to do such things, especially with the tobacco products. I think many other industries, they have something like a new products, new services that they want to be recognized in the law. And who first, he will win.
Thank you very much. Well, we hear the information about the safety that is the prevailing argument when taking the decisions. We hear the information about the stability of system, but also flexibility of the legal system. So on one hand, and this is what we discussed at the meeting, there is a certain number of laws that is outdated and needs to be changed, but then we do not like the changes. So there should be an openness for accepting the new regulations, but there is an openness of the government to work with us to provide the feedback on how certain regulations can be received. Krzysztof, you represent the investors that invest money in companies in Poland and they require the profit. Is Poland still, with all those changes, with the number of elections, with the number of slogans presented to the voters who are at the same time people working in these industries? Some of them are the workers, employees, some of them are the owners. Is Poland still attractive when thinking about investing capital in the companies or in the location itself?
Well, I'm stating the obvious, but Poland is famous of having hardworking, educated, very committed, engaged managers, employees. It has a scale, so by default it is on the radar. I think there's been a little bit of inconsistency in investors' experience, because we all love our companies, we love our portfolio companies, enjoy the progress they're making. Yet we wish Poland had slightly better image amongst global investors. But I think what is most important is the results. And Poland does have a track record of generating returns for our investors, who are, at the end of the day, these are pensioners, these are insurance companies' clients. So where this industry is today, it sits on an unprecedented dry powder of $2.6 trillion that was raised and is ready to be invested. Our firm during the lockdown, finalized its latest, largest fund ever, $24 billion. This capital is sort of looking for growth, but it's also looking for resilience and stability. I think what we discussed at the meeting before with Madam Deputy Prime Minister is that we are facing an unprecedented trend of global value chains being changed, and that's a massive opportunity for Poland, with this track record of having fantastic people here and the track record of bringing returns to the investors. Mm-hmm. The financial investors are those that are happy to take risks because they are investing long term. Mm-hmm. That means that they can ignore turbulence short term because they believe that in the longer run, the environment will improve. So the money invested today will be bringing profits, jobs, engagement of employees in the longer term. However, that's already a lot of risk taken. Removing the regulatory instability, removing this additional layer of risk, greatly helps investors to make decisions to sort of allocate capital to one country and not the other. Again, the story is great. During the lockdown, 2 of our portfolio companies made acquisitions in Poland. One of them bought a private business in Poznań. It's a supplier to Philip Morris, a packaging company. The other company signed an agreement to buy the second largest brokerage house in Poland because they want to establish European presence in Poland as sort of high quality financial supervision regime. So that shows confidence in these underlying values, underlying features of Poland, and all we are asking is a support in creating greater predictability, creating dialogue in these regulatory matters, and Deputy Prime Minister has been actually a great person to conduct the dialogue. For instance, when the Parliament was changing the so-called FDI restrictions law, we had a conversation that perhaps Poland should look slightly different on the list of countries that are not subject to these restrictions. As a result, we have an OECD investors being exempted from the regulation. So I think what I'm trying to say is that there's some progress in terms of having this dialogue, but it's my industry is moving from good to great, and this dialogue could also follow the same pattern.
Thank you very much. So one important aspect that you mentioned is that Poland is not perceived anymore as the land of quick wins and getting the money and leaving. It's the place where people, and it came from Siemens and it came from PMI, it is the place where companies want to invest. Interesting aspect that you mentioned, Michał, that we should take care of the investors that are already here. We always think that, okay, once we have them and we convince them, they will stay with us. We don't have in the business services sector that many cases that left Poland, but we do have a couple. So we should remember about post-investment care, and maybe that's also one of the aspects that we discussed at the meeting, that PAI, or whatever the agency will be or will be making sure that these investments are not given. They still have to be taken care of. Ivona, in your past life, you were a part of the team that was bringing in or luring in or convincing in the investors to Poland. Now you're on the other side of the mirror. What arguments do you usually face when you speak to investors from the business services, but also from production, from logistics? What is it that you hear that you may need the support of the government to provide the answer?
Thank you very much, Paweł, for this question. Good afternoon, ladies and gentlemen. It is really my very great pleasure to be with you. It is on personal note, my first official outing since the lockdown. So I'm even more thrilled to be with you and share a couple of ideas about the FDI trends, because it's all about answering the question what we should expect in Poland. And I believe that we should take a step back and understand what happened 6 months ago, what are the current trends, and whether Poland can be a solution, a safe haven for potential investors. So 6 months ago, almost, great majority of all investment projects stalled, simply was put on hold. According to Site Selection Guild, 52% of all investors decided to abandon their investment plans. Only 45% continued, carried on with their projects, but were hesitant and certainly restructured the project that they would implement in various locations across Europe, because this is something that you mentioned. I'm not covering only Poland, but the whole EMEA region. The first to defreeze were manufacturing projects. Why? For two simple reasons. First, supply chains were broken because crisis started and persisted in China, which means that the supply of products and half products, raw materials from Asia stopped abruptly. So companies needed to rebuild these supply chains. This was reason number one why companies started to look for options to set up or develop something brand new in Europe mostly. The second was a very timid, the customers started to buy goods. So this fact also boosted companies to produce simply. But we are not talking about the reality that we used to know. Companies started to revise their strategies. Some of them struggled to survive, other pivoted, other again started to thrive, like already mentioned ICT companies or healthcare or food processing industries. So even though UNCTAD, the United Nations agenda that monitors the flow of foreign direct investment, predicts, and their forecasts are pretty gloomy for the next 18 months, that the investment in the world should decrease by 30 to 40%. There are two good pieces of information. First, that there are some sectors that are resistant to crisis, namely the ones that I already mentioned, and we certainly should bet on those. The second, there are countries that are doing and coping very well with challenges posed by COVID-19. And good news for Poland is, according to FDI intelligence, Poland is #1 among 5 top locations for being the most resistant to COVID-19, followed by Ghana, Norway, Slovakia, and Sri Lanka, just to give you the perspective what countries we are talking about. And what is the company? Truth is that companies started to look at countries that are not necessarily offering you cost arbitrage, but concentrating on a nice blend of good quality, pretty reasonable cost, and being crisis resilient. And Poland proved to be crisis resilient back in 2008, and seems to be a very well positioned to host new or a growing investment in the country. Hence our good standing and very promising situation if you compare it with other countries from the region.
Thank you very much for the list of positive aspects. Now, Madam Prime Minister, we have heard a couple of information that may look like Poland is destined to boom. And this is the answer to the topic of the panel. Will the effects of crisis, we do see the effects of crisis that Ivona mentioned, broken supply chains, the fact that the labor arbitrage is no longer that important, it's the quality and quality of the people and quality of processes that can be provided. It is the interest and the size of Poland that Krzysztof mentioned that can provide the answer to the need of those that have the money to invest. It is the place that was resilient, and Siemens mentioned the safety was first, and we were able to secure the safety and come back to the operations. So now when you hear that, and on the other hand, you hear the very detailed information, that legal aspects, that tax aspects, that labor, human resources, and also transparency of the regulations. We did hear in your intro speech what you're working on, but would there be anything specific that you personally would like to provide to us now to let us know that yes, it is going to be a good outcome of this discussion, and if we work later on, we will be able to introduce the changes that will help us in 18 or 24 months, as it was in 2008, to, let's say, get back to normal?
First of all, thank you very much for this very detailed information regarding your businesses, but also this overview, the regional one. And what I would like to just to maybe to comment a bit what has been mentioned before. One point that hit me a bit was that is mentioned at the beginning, the bad reputation that Poland probably has had in the years before. I would say if it was so, I couldn't have had so many direct investments as it was in the last years. So, well, I know that we are now combating on so many battlefields outside Poland, but the politics and the high policy sometimes is in those last years what has appeared, that it is not going in the same line, in the same way and in the same direction as the choices made by the business, because we've got quite really very, very good data that are coming out from the last years. And we want to maintain this well picture of Poland. I would say this is my central goal. Thank you very much for the mentioning labor arbitrage. Of course, we are fully aware, and it is not only because of the crisis. The time when we compete with the cheap labor forces has gone, right? And it is true not only because of COVID, but it is mainly true like 5-6 years ago. And I would say that we've got IT companies, we've got the biggest world champions in IT sector, not because of the cheap labor forces, but exactly because of the quality of the Polish engineers. This is something that I'm always mentioning, that the number of engineers and IT specialists in Central Europe is higher than in the United States. And this is not only the number, but once again, the quality of them. What is something that I would like to, not only to promise, but what I would like to say is coming true in the next months. It is something that I told to some of you just before we came here to the stage, that because I know that this credibility and stability of the regulatory framework is something that is repeated many, many times, not only in this international, very international neighborhood, let's say, but I was very deeply inspired by the Red Tape Committee introduced approximately 10 years ago in the British administration. Was really this committee were able to reduce bureaucracy in especially the freedom of entrepreneurship, and this is something that I would like to introduce on the Polish government level. I would like to transform one of our stable committees, so this is the entity which is necessary to provide the regulatory framework, which is now called the Economy Committee, towards Red Tape Committee. It should be the committee which is a kind of a ban for the ambitious administration ambitious to introducing another regulation. So it should work like 1 in, 1 out. In Great Britain, by the way, it is now 1 in, 2 out. So I would say I would love to see the framework which is working in Poland on the basis 1 in, 1 out. And this kind of committee should inspire the administration in reduction of ambition in producing regulatory. So if you ask me, Paweł, what I would like to have, what I would like to tell you, though, the assistance which I mentioned before, the support and the dialogue, which I drop down here as a constant pattern that the ministry is working on with the business, but basically this Red Tape Committee that should be introduced to the regulatory framework path to the government as something really stable, and the promise that the number of regulation is not going to grow year by year. Thank you.
Thank you very much. This sounds interesting, but maybe to steer up the discussion, you did ask us about the potential investments that may happen. We may look back not that far, and I see here in the audience representatives of businesses that have been growing even despite the COVID. I see Iwona Dudzińska from Citi, who in some months during COVID time was hiring 100 people a month, which is unprecedented. I also see Ewa Abno-Falenska from Daimler. And you are one of the investments that Prime Minister Morawiecki announced so widely. What would you say to him now if he asks you, so what else can I do, that you follow up with something? And if I can get maybe one microphone and ask you that question, because that was a loud investment. So what would you say to the Prime Minister if he asks you what's next?
Thank you very much for the question. I haven't expected it. I would say, Mr. Prime Minister, mission accomplished. 4 years ago, we announced our investment, the first and the biggest investment, the first so big investment in Poland. It was 500 million euro. It was step one. The factory is now working, producing. We do operate on 2 shifts even, and we recruit maybe not 100 people per month, but 50, 60 people. There is a guy from Randstad, it's our partner, hello. And the first step was so successful that Daimler decided to put another investment, not engines, but batteries. And this is my honor to tell you that we will start with the production of the batteries end of September. Full production is 100,000 batteries, and the engine factory is 500,000 engines. Some of them are already working in different models of Mercedes-Benz in the whole world, because this is in the NGCC new compact cars.
So like you wouldn't ask for anything from the Prime Minister, because it looks like this is a success story.
We are absolutely happy. Thank you for the government, because we worked successfully with the government, with the local authorities, with powiat, with the city, with the Wałbrzyska Specjalna Strefa Ekonomiczna. If I could have a wish, I would say 2 things are to improve. The question is, will the effects of crisis boost FDI in Poland? I would say Poland should have more courageous energy politics, because we are obliged to invest in countries where there is renewable energy, and my concern is that Poland will not achieve this 15% of renewable energy till the end of the year. And this is on the agenda. What's more, if we are looking for suppliers, we have to check them. We have even, with the blockchain technology, it's possible, the tracking of the supply value chain. So we would love to have more suppliers in Poland, but due to the energy mix, we cannot. And the second point, I've mentioned it already during the EKG in Katowice. You say diversity. I would be bold. I would say tolerance, openness. It would help Poland. Thank you.
Thank you very much for bringing it up. Madam Prime Minister, we did hear today in the first and in the second panel a lot of suggestions, and we hear and we see a very positive reaction to what we propose. So we do hope that this is just the initial stage of our cooperation. We will get back to you with the answers that you posed the questions at the closed meeting, and we will try to provide the information what we may do, but we will also come back with the information what's important. And thank you very much for bringing all aspects of investment climate, from openness and tolerance to safety, security, and regulatory. We think that this is a very complex aspect, and as we could hear during the first panel, we know the future is not clear, but even with a couple of R's, but with more of the O's, openness and cooperation, we will be coming back to you with information that we can provide to improve the situation, to boost the FDI in Poland. Thank you very much. We will have now the coffee break waiting for the Prime Minister Morawiecki, but for a couple of more minutes we will have Deputy Prime Minister with us, so if you can approach her and maybe individually let her know what the approach to boosting the investment in Poland could be, that also can help. Thank you very much. Thank you, my guests, and thank you, participants. We'll see you in about 20 minutes. Co? Jeszcze raz? Odebrała. Ola odebrała. Nie. Znaczy mamy... A nie, jest. Jest. Tutaj. Już biorę. Jest. Nalejmy do szklanki. Ladies and gentlemen, we are almost ready to welcome Prime Minister Morawiecki, who is just finishing his preparations. So I guess 1 more minute and he will be with us. Good evening, ladies and gentlemen. Welcome back after a short break. My name is Paweł Panchy, and we all are participating in the ABSL FDI forum. We are expecting Prime Minister of Poland, Mr. Mateusz Morawiecki, to come and share his time with us. While waiting, we have the time for a short movie of one of the partners of the ABSL forum. Ladies and gentlemen, once again, welcome to the ABSL FDI Forum. Just before the break, we had a chance to listen to Deputy Prime Minister Jadwiga Emilewicz speaking on how the government sees the cooperation with business in setting up the new rules for supporting investors. Now, in this last part, we have a chance to listen to the head of the Polish government, Prime Minister Mateusz Morawiecki, who is with us to talk about the FDI strategy for business services sector. Mr. Prime Minister, we're ready to hear what and how you see the role of foreign direct investment in boosting the Polish economy. The floor is yours.
Ladies and gentlemen, dear friends of ABSL, Association of Business Service Leaders, it's an honor to be here with you today. It's not an usual occasion when I meet during this coronavirus crisis with so many people because of restrictions. But the more so, I think that this meeting can be a breakthrough when we can start a new era, a post-COVID era. Everybody knows that the coronavirus crisis brought a completely new environment with it, an uncertain environment, and environment where many businesses will have to reinvent themselves. They will have to work through their processes, look what's possible, what's not possible, what brings new risks, and what country to choose for some nearshoring, offshoring, or some other outsourcing activities. The whole coronavirus crisis was completely unique because it brought a simultaneous hit of three black swans, if you want. One was an asymmetric demand shock, the second was asymmetric supply shock, and the third one was asymmetric liquidity shock. And the fact that Poland is now in a better situation than many other countries, including most of our friends and partners from the European Union, happened because our reaction was quite quick in all the three dimensions. In terms of supply, we tried to quickly compensate for the lack of supply through our quite generous liquidity package. The package was directed to companies, and as many as 65% of companies took advantage of it. It created a situation where we can boast today that there is a zero unemployment growth in Poland, and by comparison in countries like Sweden or Lithuania, the unemployment grew by 2.5 percentage points over a very short period of time. Also, our GDP was defended by our actions targeted at the supply shock. Supply chains were disrupted all over the place, all over the world, and we tried to very quickly react to this through our labor code changes and other legislation. We can discuss it later on, I understand. And also for a wider public to soften their awareness of the crisis and to reduce their anxiety and to encourage them to invest and to consume. We have prepared a very big package, a fiscal package and a quantitative easing type package at the same time. Our fiscal package was prepared for some 10 percentage points of GDP, not dissimilar to the other partners, but maybe what was quite different in Poland was our very quick reaction. We've done this 2 weeks after lockdown was ordered. 2 weeks later, companies had money on their accounts, and the procedure was very agile at the same time, which I heard from many companies. And also our quantitative easing type of package was prepared for another 10% of GDP in different forms. Strengthening banking guarantee fund, also some form of purchasing bonds on secondary markets, so the thing which the European Central Bank and Fed and other central banks are doing for the last 11 years. We've started doing this not at a massive scale, but at least we have tested this channel of transmission mechanisms to the real economy from the monetary policy. And of course, there was a significant drop in interest rates down to close to 0.1%, which help softening or accommodating the hit created by the coronavirus. So all this response and our flexibility gave us good comfort in preparing other moves, other proposals for further waves of coronavirus to come, if it comes. Hopefully not at this level as it was previously observed. But all in all, in the 2019, I should have summarized this as well from the point of view of foreign direct investment, as many of you represent such investors. There were 370 greenfield projects in Poland, amounting for some 22 billion US dollars. So in the pre-COVID era, we were number 3 in Europe, just behind the UK and Russia. Today, according to some stats which were available to us, which were made available to us, we were number 1 in the first 4 months, which were also coronavirus, COVID months of this year. So I hope that Association of Business Service Leaders, as a very good observer of what is happening in our country will appreciate that we are already behind our political cycle, that our human capital is very well qualified, and we are trying to revamp our tertiary educational system and educational system and vocational educational system to make it even more adjust to your needs. And also our infrastructure in all its aspects is massively improving. Roads, railways, connectivity, but also the energy, internet, and other aspects of our infrastructure. All in all, I believe that this short story about here and now of Poland in the middle of COVID crisis is a good encouragement for you to further invest in Poland. And if you'd like to discuss any details of our strategy, our approach post-COVID, our situation within the European Union, as we are at the gate, a very good gate to the EU, to the single European market, I will be more than happy to discuss it today with you. Thank you.
Thank you very much, Prime Minister.
You want me to stay?
Yes, please, if you can take your seat at the stage, because you have agreed cordially to share some of your time with us to answer some of the questions that we have collected while preparing for this forum. And to present these questions, I would like to ask to the stage Janusz Dziurzynski, who is the director at Accenture Strategy Consulting, but also a member of the ABSL Management Board. Janusz has all the questions and some of your time.
Mr. Prime Minister, good afternoon. Thank you very much for being with us. One thing was common from the very beginning of this event. Everybody was absolutely super happy that we have an opportunity to meet. Some of us face to face, see our faces, and majority of us online who are watching this forum, that we have the opportunity to talk about such an important topic. I'm here to stir the pot a bit, because everything looks great, everything looks super, but I will start with the fact when we started to think about the title for this conference. It's Crisis Boosting Investments. Crisis, oh yeah, we are in crisis. Investment, this is what we want, this is what we see coming, and this is what we don't want to see stopping coming. But the word in the middle, which is boosting, question is what do we need to do jointly as a government and companies represented by ABSL, what we need to do, what we should do in order for these investments to keep coming, and for those very importantly who are here with us today, who invested billions of dollars over the course of last 10 plus years, that will continue to reinvest. So I had a pleasure to collect some of the questions to you. We had lots of interesting declarations today and very good points. And I will start, because we are talking at the leadership level, I would start talking about leadership, so about strategy and the priorities that the government sees in order to get us where we want to be. Then I would like to move a little bit towards the risks that we see and what we should do about them. Just to finish on a positive note of what we can do together. What Deputy Prime Minister mentioned before is that it's only by a dialogue, via dialogue and listening to each other, we can help the situation move forward in a positive way. But let me start with the first one, so the leadership and the strategy and priorities. We had very important things from Mrs. Deputy about new incentives, about some corporate tax policies, and also about things that was mysteriously called VIP passport for the big investors earlier today. Could you elaborate a bit more about these changes? When do they come? What are the priorities for you as you think about these changes? Please.
As many of you who are present in Poland for a number of years now, there is an evolution of your business models here in Poland, and there is also a parallel evolution of our appetite for value-added services here in Poland as well. We've started I mean collectively, the whole business and political community in Poland, we've started the whole saga with relatively lower value-added activities, relatively lower, like accounts payable, accounts receivable, and stuff like this. Then, talking to many of you over the last decade or so, I know that you were quite happy with climbing up the value ladder in terms of different functions located in your different companies and in your business models and operational models. And let me highlight this. We are very, very happy with this. We would like to help you with this evolution so that you can help us in this evolution, because we believe that there is highly qualified labor force in Poland who deserve to earn more, and it's investment well paid for you, and it's a great pleasure to talking to you every now and again. Some of you, when I hear that there are complicated functions like risk management, project management, which are more and more applied in your operational locations. And this is what we would like to strengthen. Strategically, it's critically important to strengthen this trait. So this is the most important backbone of our strategy, to increase productivity so that we Poles, we are better and better for you, the investors, from the point of view of your needs and our expectations. And we do this through many investments domestically. One of them is investment in education. And more we try to have a one-by-one approach so that we know better what sector, what company has what kind of expectations and demands for education, secondary or tertiary education, depending on who is doing what and where. And this is exactly one element of our strategy going forward. For the next 4 years, we have written this into our strategy. We want to make our system, educational system, vocational universities and so on, the world of academia, more and more aligned with the vision of the world of business. Second, we know that there is a need for good taxation environment, and this is why, I don't know what was discussed before, but let me mention the so-called, I hope it's also called like this in where you're coming from, Estonian seat, corporate income tax. Wherever profits are reinvested, there is no tax. This is basically the model of Estonian seat, corporate income tax. And also IP box, probably some of my speakers who were before me, they might have been mentioning this as well, because
they didn't. We are thrilled to learn more.
Okay, so IP box is a tool where through which there is a very low level of taxation, 5%, for those type of types of processes or pieces of a product, of a service, which are produced or delivered domestically here in Poland. So a very good taxation environment from the point of view of small and mid-sized companies. Already it's a 9% corporate income tax, one of the lowest in Europe. But for those who want to reinvest, it is going to be even lower, around zero. Then hard infrastructure. There will be the biggest investment in Europe for over the next 5-7 years, 3-5-7 years, in roads, in railways, our central communication hub, and all the hard infrastructure, which is also very important for you, for shared services centers, for different type of business process outsourcing or nearshoring and so on. And also our infrastructure in eastern and southeastern part of Poland is going to be massively improved. These are places which are less utilized, less used from your point of view, and there are beautiful cities like Lublin, Rzeszów, Białystok, with tens of thousands of new workforce, students and workforce, very eager to work in shared services centers. So I think it's a very good combination of strategic, infrastructure-related, tax-based reforms, which are going to be very advantageous from your point of view.
Thank you, Prime Minister. Can I push a bit about time frame for these changes? This is all great, but I assume this is not the 4 years strategy, and this is where we're going to see it. So when can we expect, when the investors can expect these changes coming?
Some changes already happened, like the IP box. This is already in place. The Estonian seats from the beginning of the next year, so in few months' time, so very short as well. Huge investment in vocational education, starting from this academic and this school year as well. And year after year, we are going to increase our budget for this very purpose. Then the 2019, so I reckon it's pre-COVID, but this was the year where we have realized the highest amount of money spent on research, development, implementation across different sectors. So this is not only our intentions on paper, but this is happening. Then back to your question about infrastructure. This is a longer term story, but it has started several years ago, and we are going to experience the increase of investment in infrastructure by 30 to 40% due to the EU funds, but also our domestic funds. Those of you who know our budget, you know that we have earmarked significant amount of money for roads and railways and environmental type of investments, which are going to be also very good to develop your businesses.
Thank you very much, Prime Minister. I promised we're going to move to risks, so here we go. All good, but we have heard earlier from Deputy Prime Minister that 10% of the investments are completely stalled, and another 1/3 is put on hold. Question is what we can do to unlock them, and that it happens in this country and not somewhere else. And for that, an image of an open, inclusive country that values diversity and welcomes people with different thinking is critically important. This is what investors pay tremendous attention to, and this is increasingly important for them, therefore for us. And another thing, so second aspect, is the predictability of the regulations that are coming, and frequently changing laws is something that really brings us some sleepless nights. So if you can comment on these two aspects.
Right, so beginning with the latter point, the last couple of years proved that we were able to produce, forgive the word, much less legislation than before. It's still around 15 to 20 pages of a new law, but by comparison, just 3, 4, 5 years ago, it was more around 30,000 of pages. So there was a significant reduction of legislation. That's item number one. Item number two is that in the COVID world, you wanted from us a quick legislative changes related to remote work and other labor code related legislation and regulation. So we reacted quickly, and we have implemented some quick mechanisms which were quite helpful for many of you. I had lots of video conferences with the associations of employers and entrepreneurs and with the owners and CEOs as well. we were quite well attuned with them, and we knew what they wanted. We reacted quite quickly. If there are, I speak to some of you quite frequently, like to Jacek. He's no week that we do not exchange SMSs or we don't text each other. And if there are new needs, just list them to us, what is critically important at this juncture, what is important because of COVID in the perceived post-COVID era, and we are ready to immerse in legislative process. The changes in taxation, frankly speaking, in Poland over the last couple of years, they were hugely to the benefit of companies. So you probably don't mind such changes. There will be a couple of other changes like Estonian seat, corporate income tax, and they are very good from your point of view as well. You've mentioned about risks. Honestly speaking, I'm mostly worried about external risks, like the EU and its growth and how quickly the Eurozone is going to recover. Because we are dependent to a large degree on Eurozone. 70% of our export goes to Eurozone. So fingers crossed for Eurozone. We want them to recover as quickly as possible. This is why we've negotiated 4 days and 4 nights in Brussels several weeks ago to quickly close this chapter of multi-annual financial framework, European Recovery Fund, because we know that the quicker we apply money for investment, the better for the whole Europe and the better for Poland and Visegrad Group and so on. But still, I realize that there is I want to be nice to my Southern European friends, but they are not in a very good shape economically speaking. Poland, according to European Commission and OECD data, is going to have the mildest recession this year. And even the very recent data about industrial production, consumption, PMI index, they are more positive than we would have expected just 4 or 8 months ago. It means that you will probably see over the next weeks a wave of increases in terms of the projected GDP growth, or this year is different. It's a race between those who have the lowest drop, and Poland, according to the European Commission, is going to have the lowest drop in GDP, and we are very happy with this. But I'm not so sure what the situation in Spain and France and Italy is going to look like in 6 or 12 months' time, and this is my major concern.
Thank you, Prime Minister. Talking about dependency on Europe, absolutely, totally agree. On the other hand, we are here, we can do what we can do. ABSL represents the sector of business services that you understand very well and that you appreciate very much. We are seeing unprecedented growth over the last 10 years. And happy to say that according to our latest information, we are not growing 10, 12% a year anymore, but we grow a very strong 6-7% even during these difficult times, and the staggering number of $20 billion worth of investment worth of export of these services from Poland definitely helps not only European Union but the world of that, and our place is definitely stressed and greater. Question, what can we do to make sure that this trend continues, and how we can continue the dialogue to make sure that things like difficulties in employing foreigners in our country, honestly, we are very much dependent on the inflow of quality and educated workforce, because our own supplies are at the end of the road, and we need to be open for that. And then welcoming and quickly onboarding them is critically important for the services sector. That's one. And another thing, the remote labor. Everybody loved it for some time. It's a good thing to talk to people from time to time, but Working on a daily basis on the remote is a very different story. So if you can elaborate on these two aspects, please.
As a former CEO, I can only agree with you, or I couldn't agree more. It's open space and physical presence, very important, and remote is good for some time for some people, and remote mode has to be made available for women, pregnant women, for some special situations like in the COVID era, and for those business and operational models which are suitable for this type of work. But probably majority of employers and entrepreneurs would like to have a more traditional working model. So we are going to first start with the strategy of or indicate a strategy of big companies and what kind of risks are there with COVID and with this world which is beginning to deglobalize to some extent. To some extent. I hope it is not going to deglobalize too much, but some deglobalization can be very good for countries like Poland and for locating businesses in Poland. So in other words, not everything, not every piece of value chain, production chain can be located in China or in India. And many CEOs and boardrooms started to realize this only recently, and this is good for us. As far as making sure that there is enough, the sufficient level of employment for your needs, I think, well, like let me phrase it in such a way. For first 20-25 years post-transformation, we were very hungry, and any working place was of huge value in Poland. Today, we still welcome all working places, all jobs. But today, we encourage these companies and these parts of business models and operational models which give better value for companies and better value for employees, better value for people. We believe that people are better and better educated. Many of them came back from the UK, from Western Europe and other geographies, and they are very well qualified, talented people. And also, over the last several years, we were very open for those people from Ukraine who fled or who wanted to transplant some part of their life into Poland. And I'm very much worried about the current situation in Belarus, but I have fears about what can come out of this current situation. But at the same time, I also know that many new talented people from Belarus will probably come to Poland, which there will be bigger workforce for, I hope, a bigger number of jobs created in Poland.
Do we plan as a country to make this road faster and easier?
Yes. This morning we've discussed this at special committee established for these purposes. There are different aspects of this, like visas, work permits, all were addressed. If there are any specific needs from ABSL or some of you, let me know what are they, and we'll try to address this.
What is most encouraging in everything that we are discussing is your openness and welcoming of our comments and ability and willingness to listen. So we take it very seriously, Mr. Prime Minister, and we will speak to you. Ms. Deputy Prime Minister encouraged us to talk to you as well, so we will, and we will come back. So we count on the open dialogue because, as you perfectly know, ABSL humbly represents the sector worth more than 3.5% of GDP of the country. And it's, again, the staggering $20 billion worth of export and more than 340,000 people employed. And you are absolutely right, with higher and higher degrees of complexity and value in the services we provide. Everybody wants the same thing. So this sector is still strong. But again, as I mentioned at the beginning, we need to continue boosting it because you know as a businessman that if you stand still, in fact, others will surpass you. So we need to continue moving forward.
The same in politics, the same rule.
Anyway, with this, I would like to thank you very much for the time spent with us. We appreciate your presence, words of encouragement and confirmation that we will work together to boost the business services sector in Poland. Thank you very much.
My pleasure. Thanks for having me. Thank you.
Minister Morawiecki, Janusz Dziurzyński, thank you very much for sharing the time with us and thank you for showing us the way you think the government will proceed. We still have some questions, so as Janusz mentioned, we will be in touch with the Office of Prime Minister and the Deputy Prime Minister to see how we can support the government in the way and on the road to influence the recovery after post-COVID and to boost the foreign direct investment. Ladies and gentlemen, now to conclude the ABSL FDI forum, once again I would like to ask Jacek Levernes, the founder of ABSL and its honorary president, to share with us the closing words. Jacek.
Thank you, Pavel. Thank you, Prime Minister. I would like to go back to what I started with today, which was the R, but in a little bit of a different sequence. I think what we heard today was that basically resilience was our strength because of the infrastructure, because of safety. We have come relatively strongly through the last few months as an industry and as a country. Where we are today is where we are seeing a recession and some problems already, of course, brewing and more coming, but a global recession which potentially drives some strategies that for Poland and for our industry will mean new investments and reinvestments of new centers, new jobs in outsourcing, offshoring, nearshoring, and in general in business services. Which takes me to the third R. And I think this is the one where there was the most discussion, which was R for results. And that was the talk, and we had several different discussions. But I think at the end, Janusz and the Prime Minister put it very clearly, the key is really talent and the environment. And if I understood correctly from the Prime Minister, we have the commitment to make sure that we change some of what's currently happening to make sure that these results will happen. And very concretely, what we talked about today, I think one, that we as an industry and together with the government and with the Prime Minister, Deputy Prime Minister and the different ministries, we really need to make sure that we can more easily get in foreigners and employ them much quicker and in bigger amounts, because that's a bigger ask and a bigger issue that we have been feeling for the last year or two. So that's certainly one topic. Another one was around taxes and legislative predictability and changes, where that comes up once and again in terms of how can we make sure now that we're foreseeing, okay, there will be a line hopefully of investments and there's going to be some selection criteria, we really need to make sure that the stability in the legislation, that the predictability in taxes will not put us at a disadvantage, especially as resilience put us ahead. That would really be a shame, Prime Minister. And the third thing that at least I took away was also a little bit the softer angle here, which was, I think, very well articulated by the lady from Mercedes and Daimler, which said that fantastic experience in investing here in Poland, and everything is going really, really well. But very important in an industry that's employing 350,000 people, average age is around 30 or so, Gen Y, Gen Z, where this whole area around tolerance, around diversity is super, super important. And obviously, there's a lot of different discussions. Some of it is politics, but some of it is real. So we're also asking the government to be more aware about the impact about some of those topics around tolerance and diversity, because that's super important. And a lot of these investors, us investors and our members and corporations here today, are worried about that, and it's being discussed in between Poland and HQ. So those are, I think, those to-dos that we have, and hopefully when we meet again, when maybe there's less corona or maybe there's a vaccine, hopefully in our next conference, which we still plan next year in June, we can say that we've been able to do a lot of those also improvements to make sure that the industry continues to grow strongly. So thank you everybody for coming today. Thank you, Prime Minister, for committing. Again, I think I wouldn't be misstating that our industry was part of your economic plan initially and a top 5 priority. So we hope that we continue to be that in the years ahead. Thank you, everybody.
Now more than ever, we need to reimagine. These times and our profession demand exponential change. Around the world, we are fueling the drive toward financial security for individuals and businesses scrambling for new ways of working. Together, we will re-energize a global economy recovering from unprecedented challenges by embracing new technologies, new ways of working, and creating reimagined paths to prosperity. Our work is meaningful, today more than ever before. We can all be catalysts, professionals with a heightened ability to listen, to learn, to adapt and lead. To look at where we are and recognize the spark that will ignite innovation and change the world. For more than 100 years we've been here, guiding, advising and instilling confidence. We are here for good. And in this moment, we're called upon to create trust, opportunity and prosperity for employers, clients and the communities where we live. We will lead the re-emergence and help the world's economies and companies find a new and better normal. And we will use our collective vision, ability and talent to make a real difference in the world. Working together, we will reimagine our future, starting now.
Ladies and gentlemen, that was the closing element of today's ABSL FDI forum. Once again, Prime Minister Morawiecki, thank you for being with us and sharing the thoughts and the plans of the government. Jacek, thank you very much for summarizing everything. We are open for the discussion, we are open for the cooperation, and we do hope that you will stay with us, supporting us with the arguments that we will provide later on to the government. And just to summarize, we would like to once again thank our partners. So the main partners of ABSL FDI Forum are CIMA, Global Worth, JLL, and event partners are CVC Capital Partners, EY, HSBC, Philip Morris, Grupa Kapitałowa PKP Energetyka, Randstad and Siemens. ABSL FDI Forum is brought to you in partnership with Polish Agency for Information and Trade and Polish Investment Fund. The event was powered by Brill Media. My name is Paweł Pancin, I was the host of tonight. Thank you very much for being a part of ABSL FDI Forum. And for